Joshua Steger here from ETFadviser.com.au, and today I'll do my usual weekly rundown of the Aussie ETF market and what investors should be looking at for the week ahead. I'm going to touch on three key things today. Number one, I'm going to look at the US market, and obviously it's strong, but there's going to be some key indicators that we're going to watch, particularly as we move into a historically more volatile time of the year, late September, October. Number two, I'm going to look at the resources space and why I think this is just the beginning of the rally, and a few indicators to look at in that space. And number three, we're going to look at some of the year's top performers in ETFs and just show that leaders lead. And when momentum and trend is underway, you want your money in those leading sectors. And a lot of those have pushed into new all-time highs over the past week. So we're going to take a closer look at that. So let's get started. The weekly email is already out to subscribers today. This afternoon, and we'll just touch base on some of those key ideas last week. We had obviously a very strong market, so a lot of our ideas worked. Drug was the one that didn't and is still setting up, but in terms of our other ideas, we had Atom, which is uranium, DTech in the defense space. Then we had GXAI and AINF in artificial intelligence, robotics and artificial intelligence, and clean, which has been a part of the model portfolio. And basically we've got a series of all-time highs and a new 52-week high as well. So really strong week for markets, and definitely momentum is back in play and it's risk on. So let's look at the first point that I wanted to touch on this week, and that's the US market. So you can see here's the NASDAQ. It was looking a bit shaky here, and you can see that selling, all those red bars. There was quite a lot of selling here, but the NASDAQ just never broke below that, or never spent kind of 2 days below the 50-day moving average, and that's where support is, and that's what we'll be looking at going forward. But incredible, back-to-back buying rally, basically since there was indications of a US rate cut, and it's just spurred the market onto new highs. Same with the S&P 500. The S&P 500 had looked a little bit better and was holding this 20-day moving average, which is the line in purple. And you can see once again, that's pretty much the line it's held through this entire rally from those tariff lows. So you can see that's going to be a really key point to watch. If we do spend 2 days below that 20-day moving average, there's going to have been a change in character, and that's something to keep in mind. But you can see that's where it was getting shaky, and we were kind of calling for, it looked like a correction was about to begin, but really the market just rotated its way through. So one of the key spaces we were looking at, which was showing a lot of weakness, and this is the expanded tech software sector ETF. It's not available in Australia, but it was an indication. This is basically the tech sector kind of outside those really big names, the FANG names. And you could see that topped out kind of in late July and was just looking really weak, was spending a lot of time under that 50-day moving average. But surprise, surprise, it didn't break down. It's actually recovered and broken into new all-time highs there for that ETF. So pretty incredible, and just shows you what a couple of weeks can do in the market, because it could have easily gone the other way, and that would have been the correction, and certainly that was looking weak. But now that turned into a really nice base and pushed out into new all-time highs. The big thing at the moment is the small caps, so that's what we're watching really closely, and that's kind of, there's been a big move in the small caps, and it's now up to those previous all-time highs. So it's pretty incredible. That's where you'd expect a bit of resistance to come in. So we're watching that quite closely, how it reacts here. We might want to see something like this, a bit of consolidation, just at those previous all-time highs and before a push out later in the year. So we'll see how that plays out, but certainly the small caps had been nowhere near as strong as the major indexes. So, but you can see, held the 50-day, now it's been held the 20-day, now it's been holding that 10-day moving average. So that's what we're watching. If we do start to see it break through 10-day, 20-day, that's going to be a change in character. And you can still see, there's still a lot of selling pretty much still in that small caps. And the small caps have a habit of breaking out and then retesting quite sharply and quickly. So we'll keep a close eye on that. But so far, in the US market, it's very much risk on. The trend is your friend, so everyone should be fully invested at the moment and just riding that, maybe taking some profits here and there. But just remember, the trend is your friend until it bends at the end. So there will be a correction at some stage, and certainly things are looking quite extended, but just let them play out and have your stop losses in mind, and be prepared. The good times won't last forever. So let's have a look at the VIX. So this is volatility index, and you can kind of see it in terms of, obviously lower means less volatile, and you can see that spike in the tariff correction, and then it's just pretty much trended right down and kind of back to almost the lows that we've seen since the tariff correction, and it's pretty much found overhead resistance at that 50-day moving average, which is the black line there. So once again, the VIX isn't spending more than 2 days above the 50-day moving average. So once again, that's another key indicator to watch. If all of a sudden it does spike up and spends 2 or 3 days above the 50-day moving average, things will have changed. So that's something to keep in mind as well. Okay, point 2, I want to speak about resources. So obviously, resources hadn't done a whole lot for a long period of time. So it had been a really tough space. Everyone basically forgot about it. And then out of nowhere, or seemingly out of nowhere, we've had a big rally in gold this year, and finally the big resource, the resource sectors finally started to move as well. So this, in terms of how to play it in Australia, there's MVR, which is one I like to watch because it doesn't have a huge exposure to BHP, whereas QRE, the other ETF, has, I think, about 40% of the ETF is in BHP alone. And that's the thing, that's what I wanted to touch on is, well, it looks like, the MVR is coming up to that weekly resistance. So just on that weekly chart, we kind of would expect a bit of that, and that would be a really perfect kind of, little consolidation here. Let these moving averages catch up, give it energy for the next move. And you can kind of see the same in QRE as well. It hasn't been as strong as MBR, but it's, in terms of where it is, there you're into that weekly resistance. It's already kind of trending down a little bit. So just remember, QRE has a bigger exposure to the majors, and that's kind of what I wanted to cover, because really, if you look at the majors, BHP, BHP is now back under that 50-day moving average. So it's certainly had some selling, since, basically all this month. So it just shows you, but it's not lower. It's made higher lows. So we'd expect it to get some support soon, but that's looking quite constructive. And then if that can start to move higher later in the year, that'd be a huge step change for resources, because none of the majors have really moved. So you've got BHP, you've got Rio, and these charts still don't look too good at all. I mean, just in terms of, there was a low, it's still making higher lows, but there's still quite a lot of selling around there as well, despite the fact that resources are amongst some of the best performers for this calendar year. So in terms of a sector, so it's pretty incredible that the majors haven't run. And then you look, say, overseas as well. You have a look at Glencore, which is another massive resource company, and you can see that's kind of looking a little better than, say, BHP and Rio, but still, well off those highs. Say 480 over here, it got down to 200, and now, it is kind of making those higher lows, and that looks like kind of quite a constructive little base. But there's just got a lot of overhead resistance that these resources now have to work their way through. But you can see, they haven't run at all. And then if we have a look in at a major copper miner as well, Ivanhoe Mines, which is listed in Canada, and you can see once again, it's well below those highs. So the highs at say 20 Canadian dollars got down to kind of 8, and only at 13 now. But I mean, this is looking constructive. It's making those higher lows. So what the thing is with these majors is that you can kind of see with, say, MVR and gold, that money has run into resources. So I mean, just look at this move. I'll just measure it from those lows. There's 38%. It's a pretty incredible move from those lows, the tariff lows, and that's without BHP and Rio and Glencore and Ivanhoe really moving yet. And what we would start to see is once those resources really do start to move, for them to really start to move, you want to start to see those equity investors who, say, don't necessarily have a mandate to buy resources all of a sudden say, oh wow, this is a really good investment option now. It's in terms of where the market's placed. They'll start to buy, 2% of Rio BHP in their portfolio, or 4% or 6%, and start adding to it, where most big fund managers are underweight these, and you can see that through the performance. They're just not moving at the moment. So once it starts to spread the just in terms of the commodities pricing, the momentum around that resources space, and we start to see, I mean, that's what I'll be watching, see if Glencore can start to move higher from here as an example. That'll be an indication that funds are starting to move money into that space where they've been, it's certainly been a good trade to not hold any for the last few years. Be, underweight resources, then all of a sudden they need to start to think about going market weight, and then as it starts to move up, maybe they want to go overweight resources. So that's something to keep in mind, and why I think that resource space is only just beginning. So if we have a look at MVR, how would this kind of play out? And you can kind of see that at the moment with BHP and Rio coming off. That's kind of what's happening here. So as I said, MVR doesn't have a huge exposure to BHP and Rio, but QRE is the one that does. So that's more prominent in terms of the move that it's making here. So you can see it's correcting off a little bit more, but it's at that point of resistance. So this is kind of what we want to see. Just a little bit of this here, and let those moving averages catch up. And then we'll be watching BHP and Rio closely to see when they start getting bought again. And that would, to me, would indicate that the next push for resources will be underway. So that's certainly something to watch, between now and say, say November. I'll be interested to see how that plays out, because that would kind of be the time, late October even, for them to potentially start moving again. So resources still very exciting space, and obviously that's important for the Aussie market as well. But for ETF investors, we've got, we're just sport for choice in terms of some of those resource plays. So here's a lot of these ones that we had as key ideas. ACDC is an example that kind of back at, that's all-time highs for that ETF. Pretty incredible move from those lows. So that's 56%. Pretty incredible. So these are more like battery metals, critical metals, and that type of thing as well. So green metals, what's the one in Australia? GMTL, Global X Green Metal Miners. So you can see, look at that. I mean, that's at all-time. Oh no, this is actually at all-time highs in terms of the ETF listing. So that's actually now a really nice base. Could probably move up a little bit higher. Want to see that, and then, as I said, that kind of late October, November would be perfect timing for that to move out and for that resources bull to continue, and to see that money flow into the majors now as well. So just in terms of a move from that tariff low is 60%. I mean, that's pretty incredible. That's an incredible move, and especially considering no one's really, well, certainly, you would think, just looking at BHP and Rio, most big funds are still well underweight that resources sector at the moment. So really quite fascinating. And now point 3, we'll just talk about those leaders. So let's have a look at the year-to-date returns for some of these ETFs. And there you've got, I mean, look at this. So there you've got miners. So this is gold miners ETF, GDX gold ETF. So I mean, look at that, almost 100% since the 1st of January 2025. So incredible. I mean, the year's not even finished yet, and it's already done that, almost 100%. And you've got the GDX gold miners. Then you start to get You've got other sectors as well. So you've got defense at almost 70%. You've got uranium over 60%. Another 2 defense ETFs. And then you've got South Korea, 46%. So some of these Asian names, Asia Tech, 37%. Pretty amazing. Elliston, Asia Growth, 35%. And then, of course, you've got gaming, 45%. Even hydrogen's kind of just come out of nowhere, up 42%. There's another one of those resources ETFs, XMET, one that we've got in the model portfolio as well. So really incredible moves, and they basically, all kind of pushed higher this week. So let's have a quick look at some of these names and just show that the trend is definitely your friend. And when things are running, that's where you want, where you want the bulk of your money. So let's have a look at Atom. So this was a key idea. This is in the model portfolio, and it was just so strong. We've been watching it all through here. So any time something moves like that, we're keeping a really close eye on it. And sure enough, as the market improved in the US, momentum goes back into those leading sectors. So there you've got Atom. Here you've got the leading defence name in Australia. So this is Defence Tech. Exactly the same thing. Had a really good move, set a nice base, just couldn't get under that 50-day, supported the 50-day, then whooshka. That's an all-time high close for that ETF. And then you've got things like, as I said, South Korea, another big mover. So as I said, once again, if something moves like that, then hold in tight. You want to keep your eyes peeled, and that's exactly what's happened. That had a really good push, through September, and basically came out of nowhere here, held really nicely, and then it's pushing again. So just showing that the trend is absolutely your friend. You don't want to be bottom fishing and trying to pick things that are on the way down. You want your money invested in things that are uptrending, and it's just so much easier. If something's moved like that, most people think, it's already had a big move, I don't want a piece of it. But if it sets up a nice consolidation there, it just shows you there's no sellers. And then when buyers come in again, they just push it. And everyone's a happy investor at all-time highs. So that's exactly how momentum gets running and keeps going. And then the other one as well is game. So this has been pretty incredible as well, just trending. So this is BetaShares video games and esports, and you can kind of see the same thing. Held the 50-day, held the 20-day. This is a nice little base here, and just started pushing up into new all-time highs. That'll be certainly last week was an all-time high and an all-time high close as well. So incredible, The trend is your friend, and as long as it's holding all those key moving averages, I mean, there's 110% since August last year when it kind of broke out. So incredible, and just, that's where you want your money. And it hasn't done anything wrong through that entire period. And even, you go back to the tariff correction, and this was one of the first names to actually move out from that point. So you can see now this is your tariff correction. It actually looked to have anticipated that. There's your tariff correction, and it was pretty much the first thing to move out, and then just away it goes, holding that 50-day and back up to all-time highs. So even from that tariff correction to where it is now, there's 42%. I mean, it's pretty incredible, and just shows you the trend is your friend, and that's as part of my subscription email. That's what we want to be looking at. We want to look at things coming out of really nice bases, which is what happened here, moving higher, setting another base, and just getting from base to trend, base to trend, base to trend. So that's exactly where we want to be. So just incredible moves for some of these ETFs, and once again, and that's where we focus on it as well, is these sector and thematic ETFs. So that's gold stocks, that's defense, that's uranium. South Korea, so that's pretty much the only country ETF, in the top 10 there at the moment. Everything else is more specific in the sector and themes. So it's not until you're going to have to go all the way down. Until we start to see something. Maybe small companies, but that's not even a global index. There's another index. So there's China. and that's been a huge performer as well. And most people are absolutely unaware that South Korea is even available as an ETF, let alone that it's moved really strongly. Plus, most people are well underweight, say China and Asia, which have also done incredibly well. So while everyone's talking about the US market hitting all-time highs, no one's even talking about, the things that are actually performing and feel like they've got a long way to go as well. So that's the thing. You've got to focus on, you basically will never hear anyone talk about any of, say, these top, well, gold now, but, for a long time people weren't. But, there's not a lot of talk about uranium stocks. There's a little bit of talk about defense stocks. There's no talk about South Korea. Even gaming, little talk. No talk about hydrogen. Asia, very little talk on Asia still. So it just shows you, I think a lot of people are still well underweight some of these really key performers. And when it comes to something like game, even if you miss that initial breakout, if you see the strength there and it's setting another buy point, you certainly, as I said, if it's had such a big run, sets a nice consolidation, that's something you want to be looking at, and that's exactly what's happened in the last few weeks with Atom, which we've been keeping a really close eye on. In terms of that move, that caught a lot of people off guard, but this, you got plenty of time to get positioned and get ready, particularly so it's had such a huge run, sets that base, and away it goes again. So just back into that momentum. Leaders lead. We don't want to spend our time bottom fishing and worrying about what everyone else is talking about and looking at. We want to be, have the bulk of our money in things that are trending and just let it play out and just look at some of these returns. And the year is still nowhere near finished. So really incredible. So that's all I want to touch on this week. Hopefully you found some use out of these topics. And once again, we'll look forward to speaking again next week.